What are some green and red flags about purchasing an investment property? Well, that's what this edition of 2 Yeses and 1 No is about. So let's jump to it. The first yes or green flag you want to look for is if you can add value to the investment property, whether you can renovate it, add units, etc. That'll bring more value. The more units a property has, the more income it brings in. It's the rule of thumb. The second yes is you want to run your numbers. A lot of times we want to be obviously in the black in the first year, which means you're making money, but sometimes you have to do some renovations. Sometimes, like you might have to get tenants out. So you may run into, in the red or the deficit for a year or two. But as long as you're okay with that and you're able to have that money sustained, that might be okay with you if you look for the long-term investment of the property. So just because it's running in the red for a couple of years doesn't mean it's a bad investment. And the no is, or the red flag is, if you have tenants that have been in the property for a long period of time. I'm talking like 10, 15, 20 years. The property usually is a little decrepit. You won't be able to get them out, and you can't charge what the going rate is. Because if the property is built before November 15, 2018, you have to stick with the government regulated rent increases. So you can't go market value. And it's just harder to get them out. So if you're already in the red, you're gonna be in the red for a longer period of time until the person either moves, which is hard to do, or they pass away. Again, it's not a good situation. So that's your addition of 2 yeses and a no.